Somewhere in a government computer, there is a list of every dollar you have ever earned. Your whole working life, one line per year, going back to your first job. Your monthly check was calculated from that list, not from what you actually earned, from what is written down. Almost nobody has ever looked at their own list, and it is wrong far more often than anybody admits, because it was assembled from thousands of separate reports filed by dozens of employers over 40 years, and nobody has ever checked it against your memory. That is the first of 3 phone calls. The second one goes to an office most people do not know exists, and it can stop your Medicare premium from coming out of your check at all. That is $202.90 a month that currently leaves before you ever see it. And the third one is the one the government has the least reason to ever mention to you, because it cancels a fee millions of people are paying right now without knowing it. And when you win that one, they do not simply stop charging you. They pay you back for what you already overpaid. Add all 3 together for somebody who qualifies for everything, and it is around $678 a month. Now here's the thing that connects all 3, and once you see it, you will understand why nobody has ever telephoned you about any of this. Every one of these 3 runs on a default. The default earnings record is whatever employers happen to report. The default payer of your Medicare premium is you, and the default income figure Medicare uses is your tax return from 2 years ago. Not one of those defaults is wrong exactly. They are simply the answer the system produces when nobody asks a question. And every one of them was set on a day when no human being looked at your file, and not one of them updates when your life changes. That is the whole of it. There is no scandal here, and nobody is hiding anything. It is 3 defaults, sitting there, doing what defaults do. My name is Kevin. I read the boring documents so you do not have to sit with them, and every week I bring one here in plain English with the exact words to use. If that is useful, subscribe and turn the bell on, because the third call in this video is the only one in the entire system that pays you backward as well as forward. So, the first call. And to make it useful, I have to explain how your check was actually built, because the words you use on the phone come directly from that. Your benefit is not based on your final salary. It is not based on your last 10 years. It is based on your highest 35 years of earnings across your entire working life. Every one of those years is adjusted upward for wage growth. So a year you worked in 1978 is not compared against a year you worked in 2010 at face value. They are brought onto the same footing first. Then, those 35 adjusted figures are averaged into a monthly number, and that number runs through a formula that produces your benefit. 2 things follow from that, and both of them matter enormously. The first is that if you worked fewer than 35 years, the missing years are not skipped. They are entered as 0 and averaged in as 0. So somebody with 31 years of work has 4 zeros dragging their average down. The second is that if a year is missing from the record, or recorded too low, the same thing happens. Your average is calculated on a number that never happened, and your check has been set from that number since the first day it arrived. And here's the part that makes this worth an afternoon. That error does not correct itself. It has been quietly reducing every payment you have received, every month, for as long as you have been receiving them. And there is a detail in how the formula works that makes a missing year worth far more than people assume. The formula that turns your average into a benefit is deliberately tilted. The first portion of your average is replaced at 90%, the next portion at 32%, anything above that at 15%. That tilt exists on purpose, to give somebody with modest lifetime earnings a larger share of what they put in. But it means the value of correcting an error depends entirely on where you sit on that scale. For somebody with a lower lifetime average, a corrected year lands in the 90% portion, and the effect on the monthly payment is substantial. For somebody with high lifetime earnings, the same correction lands in the 15% portion and moves the needle far less, which produces something worth saying plainly. This first call is worth the most to the people with the least. If you worked modestly paid jobs for decades, an error in your record is costing you proportionally more than it would cost somebody who earned twice as much. And those are precisely the households where an error is most likely in the first place, because that is where the job changes were frequent, where the employers were small, where records were kept on paper, and where self-employment and cash work were most common. So if you are sitting there thinking a review is for people with complicated finances, it is the opposite. The simpler and more modest the working life, the more likely the record is wrong, and the more each correction is worth. Ottie is 79 and she found 2 missing years by accident. She had worked from 1966 to 2004, with a break in the middle when her children were small, at 6 different employers, 2 of which no longer exist in any form. That is an entirely ordinary working life, and it is also 6 separate reporting relationships across 38 years, every one of them filing paperwork on her behalf to an agency she never dealt with directly. She was helping her son with something entirely unrelated, and he asked whether she had ever checked her record. She had not. It had never occurred to her that there was a record to check. What she found took her about 10 minutes to see, once the list was actually in front of her. 2 years in the middle of her working life showed nothing at all. She had worked both of them, at a company that no longer exists, in a job she remembers clearly because it was the year her mother was ill. Nobody had stolen anything. Somewhere in 1980-something, a filing went wrong, or a number was typed with 1 digit out of place, or a form was sent to the wrong office and never followed up. That is all it takes. 1 piece of paper, once, 40 years ago. And because those 2 years were entered as nothing, her average was calculated as though she had not worked them, and her check has been lower than it should have been since the day it started. Nobody wrote to tell her. There is no letter for this. The system had no way of knowing anything was wrong because from where it sits, nothing was wrong. The record said 0, and it paid what the record said. That gap between what actually happened in your life and what a computer has written down about it is exactly why the quiet rules exists. Not clever strategy. The plain list of the things nobody will ever check on your behalf, in large print, with the exact words to say when you ring, so that a filing error from 1980-something does not quietly reduce every payment for the rest of your life. Reading it cost you 1 afternoon. Not reading it is what it has already cost, every month, without anybody mentioning it. It is at kevinexplains.shop. The link is in the description below and in the pinned comment at the top. And if you are watching this on your television, there is a code on the screen you can point your phone camera at. 7-day guarantee, no argument. If it does not put something in your hands you did not already have, send it back. Now, how to actually make this call, because vague questions get vague answers. Before you dial, get 3 things in front of you. Your social security number, a photo identification, and anything at all from your working life that proves earnings, old tax returns, any W-2 forms you kept, pay stubs, even a letter from an employer. You do not need all of it. You need whatever you have for the years you suspect. And here is the sentence to open with, and I would write it down before you ring, because it puts them to work on the 2 specific things that actually move money. Hello, I would like to review my earnings record with you year by year, and I want to request a recomputation of my benefit. I believe some of my earnings may be missing or recorded incorrectly. Then stop talking. Let them pull it up. 2 phrases in there are doing the work. Year by year, because it stops the conversation being a yes or no about whether your check looks right. And recomputation, which is simply their word for running the numbers again. As they read it out, you are listening for 3 things. A year showing nothing when you know you worked, a year showing far less than you remember, and any employer missing entirely, particularly if you were self-employed, because self-employment earnings go missing more than any other kind. When you find something, ask 2 follow-up questions and use these words. What documentation do you need from me to correct this year? And if this year is corrected, will my benefit be recalculated, and will the increase be backdated? Backdated is the word that matters, because if you have been underpaid for years, there may be money owed to you going backward, not simply a higher payment going forward. And there is a second thing to raise on this same call, which applies to a very large number of people watching and is missed constantly. If your husband or wife has died, ask them directly to confirm you are receiving the correct survivor amount, and to tell you whether you are better off on your own record or on theirs. Survivor benefits are among the most complicated rules in the entire system, and the outcome depends on your age when you claimed, their age when they died, whether either of you had already claimed, and several other things that interact in ways that are genuinely difficult. What happens in practice is that people get placed on one record and stay there, sometimes for years, when the other one would have paid more. So the words are these. My spouse has died, and I would like you to confirm I am receiving the higher of the 2 benefits I am entitled to, and tell me what my benefit would be on the other record. That single question has changed people's monthly income by hundreds of dollars. And there are two specific survivor situations worth naming because they catch people repeatedly. The first is somebody who claimed their own benefit early at 62 or 63 and was later widowed. Claiming early permanently reduced their own payment, but the survivor benefit is calculated separately and is not automatically reduced by that earlier decision in the same way. So the comparison between the two records can come out very differently than people expect, and the assumption that claiming early ruined everything is frequently wrong. The second is somebody who was widowed before they ever claimed anything. There is a strategy available there that almost nobody is told about, which is that you can take one benefit first and switch to the other later. Take the survivor benefit at 60, let your own record keep growing until 70, and then switch, or the reverse, depending on which is larger. That switching option exists specifically for survivors. It was removed for ordinary spousal benefits years ago, but survivors kept it, and it is one of the few genuine choices left in the system. So if you were widowed and you have not yet claimed everything, the question to ask is not simply which is bigger. It is, which should I take now and which should I let grow? That is a conversation worth having with a person rather than a video, and it is the single highest value question in this entire section for the people it applies to. And there is a third reason to make this call that has nothing to do with errors at all. If you have worked at any point after starting your benefit, even part-time, even for 1 year, that income may have replaced one of the zeros or one of the low years in your 35. That recalculation is supposed to happen automatically. It usually does, but it is worth confirming because a year of work at 68, replacing a zero from 1974, can raise a payment permanently. So while they have the record open, ask whether any year since you claimed has been included, and whether your benefit was recalculated when it was. One more thing about this call before we move on, because it is what most people ask next. You can see your own record without ringing anybody. There is an online account through the Social Security website that shows your full earnings history, year by year, going back to your first job. That is genuinely the better starting point if you are comfortable with a computer, because you can sit with it, take your time, and compare it against your own memory without anybody waiting on the line. And if you are not comfortable with a computer, this is worth asking a family member for one afternoon of help. Not to handle it for you, simply to get the list on a screen so you can read it, because the list is the whole thing. Once you have your years in front of you, the phone call stops being a vague inquiry and becomes a specific conversation about 3 particular years, and specific conversations get results. There is one more reason to look at it now rather than later. Corrections are generally easiest within a certain period after the year in question, and while there are exceptions for genuine errors with evidence, the older the year, the more documentation you need. Which means the value of doing this is highest today and declines slightly every year you wait, and the years most likely to be wrong are the oldest ones. So if you take nothing else from this section, take this. Get the list. Everything else follows from having the list, and almost nobody has ever seen theirs. Now the second call, and this is the one to an office most people have never heard of. It does not go to Social Security, it goes to your state, and that is precisely why almost nobody makes it. The federal government does not administer this and cannot enroll you in it. It is called the Medicare Savings Program, and what it does is straightforward. If your income is below a certain level, your state pays your Medicare Part B premium for you. That premium is currently $202.90 a month, and it is deducted from your Social Security payment before it reaches your bank. You have never written a check for it. You have never watched it leave. Which is exactly why nobody ever stops to ask whether somebody else is supposed to be paying it. $202.90 a month, restored to your check, is $2,434 a year. And it is worth saying what that actually feels like month to month, because $200 is an abstraction until you attach it to something. For a household living on Social Security and a small pension, that is the grocery budget for a fortnight. It is a heating bill in January. It is the difference between filling a prescription and stretching one. It is not a windfall, and I am not going to describe it as one. It is simply a bill that somebody else is supposed to be paying, and is not, because nobody ever asked. Now, why people miss this one, and it is 3 reasons. The first is that it is a state program with a federal-sounding name, so people assume Social Security handles it, and Social Security does not. The second is that the limits change every year, and they have been getting more generous. Somebody who checked 6 years ago and did not qualify may well qualify now, and they will never find out because they have already decided the answer. And the third is the biggest. People disqualify themselves in their own heads. They assume they earn too much, without ever looking at the actual figure. And there is a fourth reason people miss it that I want to name honestly, because it is the real one for a lot of households. It feels like welfare. And for a generation that worked 40 years and prided itself on never taking anything, that feeling is a genuine barrier, and I am not going to pretend it away with a slogan. So let me put it differently. You paid Medicare taxes out of every paycheck for your entire working life. That is what funded the program. The premium you are paying now is on top of decades of contributions you already made. This program was created by Congress specifically so that people whose income falls below a certain level are not paying that premium out of a modest fixed income. It was designed for exactly the situation, and it was funded by exactly the taxes that you spent 40 years paying. Whether that reframes it for you is your own business, and I am not going to push. But I have watched people leave $20,000 unclaimed over a decade because of a feeling about a word, and I would rather say something than let that pass unremarked. There are also different tiers within the program, which is the practical point. It is not one line you are either over or under. There are levels, and somebody slightly over the threshold for full help may still qualify for a level that covers part of it. So even a no on the first question is worth following up with, is there another level I might qualify for? So here is what to say when you get through, and there is a second sentence that doubles the value of the whole call. I would like to apply for the Medicare Savings Program, and I would like to know this year's income and resource limits for my state. And then, in the same breath, add this. I would also like to apply for extra help with my prescription costs, because those two things travel together. And this is the part almost nobody knows. Qualifying for the Medicare Savings Program generally enrolls you in extra help automatically. And there is a category of person who is automatically enrolled and does not realize it. So let me name them. If you already receive supplemental security income, or you have full Medicaid, you are generally enrolled in extra help without applying. Social Security sends a letter about it on purple paper, which sounds like a strange detail and is genuinely how you identify it. So if somebody in your household receives either of those and has never seen that letter, that is worth one phone call to confirm, because the enrollment can occasionally fail to happen and nobody notices until a pharmacy charges full price. And the reverse situation catches people too. If you were enrolled automatically and your circumstances change, the enrollment can end without much warning. A change in Medicaid status ends the automatic qualification, and unless you then apply directly, the help stops. Which means this is not a set-it-and-forget-it program. It is worth confirming once a year, in the same afternoon you look at everything else. Norval is 81, and he talked himself out of it for 9 years. He worked for the county for 32 years, and he has a small pension, and in his mind that pension made him somebody who does not qualify for assistance. He said the word assistance to me the way you would say a word you did not want in your mouth. So he never looked at the number. Not once in 9 years. And the number, when he finally looked, was well above where he sits. Comfortably above it. He would have qualified the entire time, and the program would have restored his Part B premium every month for 9 years. That is over $20,000 from a phone call he decided not to make because of what he assumed about himself, rather than because of anything he had actually checked. That is precisely what the guide is built for. The limits written down plainly, in large type, so that nobody spends 9 years disqualifying themselves from something they were entitled to on the basis of a feeling rather than a figure. For somebody in Norval's position, the cost of not checking was more than $20,000 and a phone call he never made. Same place, kevinexplains.shop. The link is in the description and in the pinned comment, and the code is on your screen if you are watching this on the television. 7-day guarantee, every single time. A man who never once looked at the number for 9 years because of what he assumed the answer was. So let me give you the actual figures, because Norval is the reason I am doing this rather than telling you to go and find out. For extra help, the income threshold sits at around $23,500 a year for one person and around $31,700 for a married couple living together, higher in Alaska and Hawaii. On savings, the limit is around $16,590 for one person and $33,100 for a couple. And there is an exclusion many people miss. If you tell them you have money set aside for burial costs, up to $1,500 per person is excluded on top, which raises those figures to roughly $18,090 and $36,100. Now here is the part that changes who qualifies, and it is the single most misunderstood thing in this entire subject. Your house does not count. Your vehicle does not count. Your personal belongings do not count. What counts is money in accounts. Checking, savings, certificates of deposit, shares, bonds, and retirement accounts. So the person who says, "I own my home, I could never qualify," is looking at the wrong asset entirely. The home is excluded. It has always been excluded, and what extra help actually does is not small. It covers your drug plan premium, it removes your deductible, and it caps what you pay for an individual prescription at around $5 for a generic and $12.65 for a brand name. The Social Security Administration's own estimate of what that is worth is about $5,700 a year per person. That is roughly $475 a month on top of the $202.90 from the first program, which is where the total in the title of this video comes from. The Medicare Savings Program is applied for through your state. Extra help can also be applied for directly through Social Security if you want to pursue it separately, and that application is one of the simplest in the entire system. Two more things worth knowing. Roughly 1 in 5 applications is denied, and most denials are documentation problems rather than genuine ineligibility. A missing paper, an account entered wrong, a form left incomplete. Most are fixable within 60 days, so a denial is very often a request for one more document rather than a verdict. And coverage generally starts the month after approval. It does not reach backward, which means every month of delay is a month at full price you do not get back. And that is the honest answer to when should I apply? And there is one more piece of this that a great many people qualify for and never hear about, which sits alongside both programs rather than inside them. If your income is limited, there are also programs covering heating and cooling costs, food assistance for older adults, and in most counties, a local agency on aging that administers things nobody has ever heard of. Property tax relief, transport to medical appointments, home repair assistance. I am not going to run through all of them because they vary enormously by state and county, and I would be giving you a list that is wrong for most of you. What I will tell you is that the single phone number worth having is your local area agency on aging. Every county in the country has one. It exists specifically to know what is available where you live, and it is free. And the useful thing about that call is that it is one conversation covering everything, rather than you trying to guess what exists and ring each one separately. So if you are making the 3 calls in this video anyway, that is a 4th number worth adding to the afternoon, and it is very often the one that turns up something nobody expected. Now the 3rd call, and this is the one I told you about at the start. This one is about a fee with a name so bureaucratic that it functions as camouflage. It is called the Income-Related Monthly Adjustment Amount, and everybody says the initials, which sound like a woman's name, and I will too. Here is what it is. If your income is above a certain level, Medicare charges you a surcharge on top of your ordinary premium. For this year, that first threshold sits at $109,000 for a single person and $218,000 for a couple. Cross it, and your premium moves from $202.90 to $284.10. At the top of the scale, it reaches $689.90 per person per month. On its own, that is simply a rule, and reasonable people can disagree about it. Here is the trap. The income Medicare uses is not what you earn now. It is your tax return from 2 years ago. So think carefully about who that hits hardest. Somebody who worked a full year, earning a full salary, and then retired. Their income today is a fraction of what it was, and Medicare is charging them a surcharge based on a salary they no longer receive, for a job they no longer have. They are being charged today for money they stopped earning 2 years ago, and this is not a small group. It is essentially everybody who retires from a reasonably paid job. It happens to them at exactly the moment their income drops, which is the worst possible moment, and the letter that arrives explaining the surcharge does not mention that anything can be done about it. Something can. There is a form. It is called the SSA 44, and its full name is the Life-Changing Event Form. That phrase is the key to the entire thing. The government permits you to challenge that surcharge if your income fell because of a major life change, and the list of what counts is longer than people expect. Stopping work, reducing your work hours, the death of a spouse, marriage, divorce, loss of a pension, loss of income-producing property through a disaster, and an employer settlement payment. Retirement is on that list, which means the single most common reason a person's income falls is a qualifying event, and hardly anybody files it. So the words for this call are these: I have had a life-changing event that reduced my income. I have retired, and I would like to file Form SSA 44 to have my Medicare premium recalculated using my current income. Then ask them two things. Where do I get the form, and what documentation do you need with it? The documentation is usually simple. A letter from your employer confirming you stopped work, a statement showing your current income, a pension statement. It is not an audit, and they are not looking for a reason to refuse. And here is the part that makes this the best of the three calls. If they approve it, they do not simply lower your premium going forward. They go back and refund the surcharges you already paid while they were using the wrong figure. Money from the past, returned to you. There is almost nothing else in this system that runs backward. Two more things about this one because they decide whether it works. The first is timing. You can file this before the surcharge ever starts. If you retired this year, you do not have to wait 2 years for the bill to arrive and then appeal it. You can file in advance with a reasonable estimate of your new income and prevent it rather than recovering it. That is considerably better than the alternative, and hardly anybody does it, because the form is only ever mentioned to people who have already been charged. The second is that this is not once. If your income falls again or a second qualifying event happens, you file again. People treat it as a single lifetime appeal, and it is not. And if you are refused, ask why in writing. The refusals I hear about are almost always documentation problems rather than a judgment that you did not qualify, and a refused application with the missing paper attached very often succeeds on the second attempt. Verda is 70, and she paid it for 14 months without ever asking why. She retired at 68 from a hospital administration job. Her final year of work was a full year at a full salary, and 2 years later, in her first year of Medicare, the surcharge arrived. She assumed it was simply what Medicare costs. Nobody had ever told her that Medicare costs different amounts for different people, so there was nothing about the number that struck her as questionable. 14 months of paying a surcharge based on a salary she had not received in over 2 years. And her income by then was a pension and Social Security and nothing else. The form existed the entire time. So did the refund. Now, before I give you the order to make these calls in, let me save you from the 3 things that turn a yes into a no. The first is calling the wrong office. Calls 1 and 3 go to Social Security. Call 2 goes to your state. Sending the right request to the wrong office is the most common reason people conclude a program does not exist. The second is arriving without documentation. When you say a year is wrong or that your income dropped, they need to see something. Your word is not the problem. It is simply that the person on the phone cannot approve anything without a document, and they will not chase you for it. And the third is waiting. On the earnings correction, there are limits on how far back you can go in some circumstances. On the surcharge appeal, every month you wait is a month of overpayment. And on the state program, coverage starts after approval rather than reaching backward. None of those 3 are about being clever. They are about being ready. There is a 4th mistake worth naming, and it is the one I find hardest to watch. People make one call, get a bad experience, and conclude the whole thing was not worth it. Hold times are genuinely long. The person who answers may be new. You may be transferred twice and told 2 different things. That is the reality of ringing any large agency, and I am not going to pretend otherwise. But the reason to persist is not stubbornness. It is that the return on that afternoon is enormous relative to almost anything else you could do with it. If 2 of these 3 land, you have changed your monthly income permanently for the price of some time on hold. So the framing I would offer is this. It is not a phone call. It is a job that pays several $100s an hour for one afternoon, and the only qualification required is that you do not hang up after the first unhelpful answer. Now, one more thing about all 3 calls, and it is the habit that separates the fixes that happen from the ones that quietly do not. Write it down. The date, the time, the name of the person you spoke to, and what they told you. If they say they will look into something, ask for a reference number or ask for it in writing. Government offices are not malicious, and they are enormously busy. Things get lost. A reference number and a name turns your second call from starting over into continuing. And be persistent, because this is the part that decides who actually gets the money. Wait times are long, and not every person who answers knows every program. If somebody tells you a program does not exist, or that they cannot help, that is very often the end of it for people, and it should not be. Thank them, ring off, and ring again. The next person may know exactly what you are asking for. Ask for a supervisor if you need to. The people who succeed at this are not smarter or better connected. They are the ones who did not stop after the first no. And if you are looking at your own situation and cannot work out which of these three actually applies to you, email me. The address is on your screen and in the description below. Tell me roughly what your income looks like, whether you are still working, and whether you have been widowed, and I will tell you which of the three calls is worth your afternoon. For most people, it is one or two of them rather than all three, and knowing which makes the whole thing simple. So where do I come out on all of this? What strikes me is not that these programs are hidden, because they are not. Every one of them is published, documented, and explained on a government website by somebody whose job was to explain it. What is missing is not information. It is anybody with a reason to bring it to you. Social Security has your earnings record and can see the zeros in it. It has no obligation to ring you about them. Medicare knows your income fell because it processes the tax data. It has no obligation to recalculate without a form. Your state runs a program that would pay your premium. It has no way of knowing you exist until you apply. 3 offices, all holding the relevant fact, none of them permitted or required to act on it unprompted. And the effect on you is exactly the same as if somebody had arranged it deliberately. Which is why I understand completely when people in the comments assume somebody did. Nobody did. It is simply what happens when a system is built to process requests rather than to find people. So the burden falls where it always falls, on the person least equipped to carry it and least likely to know it is theirs. So here is what to do, and it is the 3 calls in order, because the order matters. Call 1 to Social Security. Ask for a year-by-year review of your earnings record and a recomputation of your benefit. If you have been widowed, ask them to confirm you are on the higher of the 2 records. Call 2 to your state's Medicare Savings Program office. Ask how to apply and what this year's income and resource limits are. Then ask about extra help in the same conversation. And do not decide for yourself that you earn too much, because your home and your car do not count. Call 3, back to Social Security. Tell them you have had a life-changing event that reduced your income, and ask for Form SSA 44. If you retired, that qualifies. If they approve it, they refund what you overpaid, and write everything down on all 3. Ottie lost money on every payment for decades because of a filing error in 1980-something that nobody was ever going to notice. Norval spent 9 years deciding he did not qualify without once looking at the number. And Verda paid a surcharge for 14 months on a salary she had already stopped earning, on a form that had existed the whole time. Not one of them did anything wrong. Every one of them was living with a default that somebody set on a day when nobody looked at their file. And that is really the whole of it. Nothing in this video asks you to understand a formula or make a decision or take a risk. It asks you to ring 3 offices and say 3 specific sentences and to write down what they tell you. So make the calls. One afternoon, 3 offices, and a pen for writing down names. Nobody is going to make them for you, and that is the only reason the money is still sitting there. I am Kevin. Thanks for watching. Do not forget to check the quiet rules at kevinexplains.shop.